Hi there, I'm JP Dice with Skybound Partners. Big news in the aviation world recently. 100% bonus depreciation is back. With me is KJ McCarter. He's with Aviation Tax Consultants. What does all of this mean for someone making the big investment to buy an airplane?
It's a huge deal for aircraft owners and purchasers to have 100% bonus depreciation back because it allows a much more substantial tax savings in year one for a taxpayer acquiring an aircraft. So I know we can dive into the details here in a couple minutes, but it's a huge win for the industry for sure.
Okay. It's my understanding, and the reason I'm talking to you, you're the tax expert, but this is not for everybody buying an aircraft. You just can't automatically write this airplane off. It has to have there's some rules related to business use, correct?
Correct. Correct. We have to be using the aircraft for legitimate, well-documented business use in order to be able to depreciate the aircraft to begin with. So this only applies to those taxpayers that are purchasing an aircraft for business use. Aircraft that are used purely for personal use, this 100% bonus depreciation uh, law passing won't have any implication for them.
Okay. So give me some examples, and just thinking here, somebody that, hey, I'm buying an airplane because I want to go on weekend trips to the beach. That's not it. But let's say you are a company and you have offices throughout the Southeast or even beyond that, and you need to get your employees from point A to point B to visit those offices, or you need to visit those facilities. This is where this comes into play, or maybe even visiting potential clients or customers.
You hit the nail on the head. All the above. Companies that are acquiring an aircraft to fly around to their offices throughout the Southeast or throughout the United States, companies that are going to fly around to visit with clients or prospects or go to job sites or go give quotes. Whatever that non-local travel need is, as long as it's a legitimate business need that the company has for the aircraft, that's who can benefit from this 100% bonus depreciation because they'll have the ability to write off their use of the aircraft for their portion of use that is for business.
Give me a simple example. We'll talk about a jet aircraft that say costs $5 million, and a company was going to buy this, or an individual that has a company is buying this airplane. How does this work as far as what happens in the tax process?
Yep. So let's say it's a company that has a $10 million taxable bottom line before the plane. So they were going to profit $10 million before they went out and acquired an aircraft. Let's say they go out and this summer they're on the hunt for a $5 million aircraft and they buy it in the fall. If they use the plane for 100% business use in 2025, for example, then we can depreciate the full $5 million purchase price of the aircraft in 2025 against that $10 million of taxable income. So taxable income goes from 10 million to 5 million after we depreciate the plane. And our tax savings, it depends on the tax rate that's being applied to that taxable income. But let's just say it's as a napkin math rule of thumb, let's say it's 40%. We just save 40% of $5 million. So 2 million bucks.
Okay, so a significant savings for a company that is going to be using an aircraft for business because of this change in the law. Now, let's talk about something else that sometimes confuses people. Recapture. How does that work? Because on the back end, there's some recapture here.
That is the caveat for that hypothetical. We save 2 million in 2025, but let's say we go and sell that plane in 2029. Let's say we sell it for 4 million in 2029. When we sell it for 4 million in 2029, our basis in the plane is zero. We fully depreciated the plane. So our gain on the plane is 4 million. So we have $4 million of ordinary income in the year that we sell the plane and we pay tax on that 4 million.
Okay. So is there an advantage to at that point go out and we're buying a new aircraft? What kind of the guidance there that you suggest?
Great question. And that is the normal strategy amongst our client
Yeah.
base. We don't have like kind exchange for aircraft right now,
Mhm.
but having 100% bonus depreciation back kind of allows us to do a similar, get to a similar result really If we sell the plane, the current plane, in the same year that we acquire the next plane, and if those two transactions hit the same tax return in the same tax year, they can offset each other. So let's continue on with the same example. We just sold a plane for 4 million in 2029. If we go out and buy another aircraft for 5 million in 2029, right now we're slated to have 100% bonus depreciation in 2029 as well. So we take 100% bonus on that $5 million plane. We wipe out the $4 million of gain from the sale of the previous aircraft, and we have an additional 1 million of depreciation to offset other taxable income in that year. So that is the common strategy: buy and sell in the same year to allow the two to kind of offset each other.
Okay, makes complete sense. One other question. You do this, you want to have all of your record keeping, all of your paperwork proper, because you don't want to send out any red flags that you're not doing something that you should be doing, or going against the rules of the laws. What kind of documentation are you typically talking about when you're keeping records of an aircraft?
Excellent question. It's extremely important to have a very detailed flight log, an income tax flight log that's designed to comply with the IRS's regulations. The IRS gives us a very explicit rule set to follow for how to document our business use of an aircraft and non-business use, and how to account for that non-business use. So you want to make sure that you have a flight log that's being kept in accordance with the IRS's rules. Feel free to reach out to our firm if you need help with that. In addition to that, if you are audited, you'll want support outside of the flight log that helps evidence the business flights listed within the flight log. So things like emails, meeting agendas, calendar invites, walkthrough notes, things like that that help evidence the business that was conducted with the aircraft as well. All extremely important to retain in the event of an IRS audit.
Now, this doesn't mean if you buy an airplane for business use, you can never use it for a personal trip. There's a percentage of business versus personal, correct?
Absolutely. So the way to think about it is the deductibility of the plane is prorated based on how you use it in each tax year. So for example, if we use the plane 80% of the time for business and 20% of the time flying around for vacation, there's absolutely nothing wrong with that. Most of our clients do have some entertainment use of the aircraft. The IRS gives us a methodology to use to properly account for that entertainment use and not deduct it. So essentially, that 80% would be deductible to business use, the 20% would be non-deductible. So that's why in year one in 2025, we would advise our clients that they can maintain 100% business use. That's going to be optimal, so we don't have depreciation disallowance when we take the 100% bonus depreciation. Let's say with our same hypothetical, we had that same taxpayer that bought the plane in 2025. In 2026, they had 80% business use and 20% entertainment use. All of their aircraft related expenses in 2026 would be prorated that way, 80/20. But since they stayed above 50% business use, they don't have to go back and undo the bonus depreciation that they took in 2025. So there's a 50% hurdle that we have to maintain going forward for business use.
All right, KJ, let's talk about your firm, and if somebody wants to reach out to you to set up a consultation or have you go through this process with their individual circumstance, what's the best way to reach out to you?
Yeah, email is perfect, and it's kj@aviationtaxconsultants.com. We love to do introductory calls and talk about what your needs are, what questions you have, sales and use tax planning, in addition to the income tax planning that we're discussing right now. If we can help, at the conclusion of that call, we'll put together an engagement proposal. If there's nothing we can help with, then there's no charge for the call. So we're always happy to do those. Definitely don't hesitate to reach out.
All right. Thank you very much, KJ. Great advice. And you are a wonderful resource, not only to Skybound Partners, but our clients as well, when they do an acquisition, to help them kind of navigate through this process and do it the right way. So I appreciate you being with us today.